Hey, Wilf, we've seen a trickle of press releases from the banks reiterating, most of them, their dividends as they had planned to do. Citigroup reaffirmed their dividend of 51 cents a share. Morgan Stanley said that it anticipated continuing to pay a quarterly dividend of 35 cents a share. Goldman Sachs maintained its dividend of $1.25 per share. Bank of America maintaining its dividend of 18 cents a share. Now, here's where it gets tricky. Wells Fargo did say that its third quarter dividend would be reduced from its current level of 51 cents a share, but did not go so far as to say what level it would be reduced to. The company said that that would be announced with its July 14th earnings. Capital One announced its stress capital buffer requirement as calculated by the Federal Reserve at 5.6%, but did not make any mention in its press release that we saw with regard to the dividend. So we will keep an eye out for further commentary on that front. It's important to note, though, guys, that most of the capital return programs from the banks, about 75% comes from buybacks. Those were suspended for the second quarter. The Fed is requiring that they suspend those for the third quarter. So only about 25% of payouts come from dividends. But it's worth noting that at least the two banks that we've been watching, Wells Fargo and Capital One, seem to be looking like that.
And I'd just add, Leslie, we're still waiting for J.P. Morgan's, as far as I can tell, in terms of the big banks.
I have not seen J.P. Morgan's press release yet.
But we're not expecting any curveballs in that, but just to say that we haven't seen that one yet. Leslie, thanks very much for that. And Mike, in terms of what the after-hours action is here, Wells Fargo slipping a little bit, perhaps surprisingly, because it was thought that the dividend would have to be cut. I guess they've said it's going to be cut, but haven't confirmed the extent to which it's going to be cut, and that uncertainty might be a factor. But the other banks moving fractionally higher after a strong day today.
I was going to say, Wells Fargo was also up during the regular session today, so just kind of giving that back a little bit. I don't think any of the news so far is becoming as too much of a surprise after we did get the stress test results last week.
We'll see how the banks trade tomorrow. We're also going to look for earnings after the bell from FedEx. We've got Secretary Mnuchin and Fed Powell testifying, so always watching for headlines there. And we're going to count the number of times Chair Powell says the word uncertainty. Yeah,
we'll see if it's as many times as the Lululemon CEO said sweat. But anyway, we are out of time on Closing Bell.
Sweat life.
Fast Money starts now.
At least 15 times in that interview. Thank you. Fast Money starts right now. I'm Melissa Lee. Tonight's trader lineup: Guy Adami, Tim Seymour, Karen Feinerman, and Bono and Eisen. Coming up on Fast, a social shutdown. The pressure mounting on Facebook as more high-profile advertisers pull out. We are breaking down the big money impact straight ahead. Plus, shares of Micron popping in the after hours after reporting results. The company's conference call is now underway. We'll bring you all the big headlines from the quarter. And later, break out the candles. Tesla is celebrating 10 years as a public company. So will the next decade be just as electric? One of Tesla's biggest bulls will join us straight ahead. But we start off with breaking news on the banks. Let's get straight to Leslie Picker for the very latest. Leslie.
Hey, Melissa, we've seen a flurry of press releases from banks announcing plans with regard to their dividends, and some announcing that those plans with regard to their dividends will come at a future date. One of those includes Wells Fargo, which said that its third quarter dividend will be reduced from the current level of 51 cents per share. They did not mention what level it will be reduced to, only to say that that announcement will come in conjunction with its July 14th earnings. Another company that analysts had on kind of its watch list for potential dividend cuts was Capital One. They announced their stress capital buffer requirement at 5.6%, but did not make any mention of what it plans to do with its dividend in the press release that we have seen so far. And the press releases keep coming. Not all the banks have announced yet, so we still have an eye out. Of the companies, though, that have reaffirmed their dividends, Citigroup, Morgan Stanley, Goldman Sachs, Bank of America are some of the big ones that have already reaffirmed their dividend based on the Fed's stress test requirements from last week. Melissa.
Just to underscore, Leslie, J.P. Morgan has not issued a release yet.
Not that we have seen. Correct.
Got it.